Now, players at the fixed income markets are also waiting for the decision of the Monetary Policy Committee as it decides shortly. Let's take a look at where the markets finished off yesterday at the fixed income market as Robert Omotunde, the head of research at Afrinvest, joins me on the program. Robert, welcome to the program.
Thank you, Bolaji. Good morning.
Good morning. Now, the market was bearish yesterday, as shown in the FAME trade, and also the level of units that were traded by investors. Take us through what happened at the markets yesterday.
Okay, what is been basically happening is the fact that investors are anticipating the decision of the Monetary Policy Committee, of course, which will be rolled out later this afternoon. And the major point of call for investors in the fixed income market is the direction of the interest rates. You will recall that for some time now we've had this inflationary pressure within the economy that has seen our inflation rise as high as 16.5%. And you know that investors within the fixed income aim, do track the direction of the inflation, the direction of inflation for them to be able to take major decisions as to where yields are going to move. So what we saw in the market yesterday or in the last few days, has been that investors are cautious in trading across the term structure of in the fixed income environment, both for the short-term tenured treasury bills instruments as well as bond instruments. We've seen a lot of caution in the way investors are positioning. And as we speak now, the yield environment is quite high, very high indeed, because of some of the action that have also been taken by the Central Bank of Nigeria in recent time. You recall that about 2 weeks ago, the DMO had his auction, for July, and we saw the marginal rate at which the DMO issued, average was about 14.5%. Again, the Treasury bills auction was conducted last week, and the Central Bank issued as high as 16% for some Treasury instruments. So what that is suggesting is that investors' expectation of future interest rate and, of course, inflation is high, and this is what has been determining the direction of how yields have been priced recently.
Some analysts are of the view that no matter the decision of the MPC, the bonds and other fixed income instruments will remain attractive. Do you agree with this?
Well, to some extent, yes. The major factors that have been driving participation in the fixed income aim can be seen from two directions. The first is the macroeconomic risk that the country is facing, for which we have higher inflation and higher expectation of future interest rates. And of course, this is a factor that is pricing the market. But more importantly is the fact that most investors that are waiting are probably waiting for the best time to come in. Funds are always anxious to play within the fixed income, and more so that we have mostly local investors participating in that market. So true, whichever way the pendulum swings for monetary policy rates, the outlook for the fixed income market is still positive, because we will likely see investors playing within that segment. Already, rates are high, very attractive, with the exception of the August 2016 instrument and some two other instruments that are trading slightly at premium to par. Most of other instruments are trading at discount to par. In fact, within the medium term to maturity of between 0.5 and 1.8 year time to maturity, we've seen rates as high as 16% and even 17%. This is attractive enough for any investors to take position, whichever way the Monetary Policy Committee decides to move.
Oh, just before I let you go, Robert, while the fixed income markets remain attractive, there is the opinion that the increasing attractiveness of fixed income securities owing to rising yields has the potential of keeping investors' equities averse.
Well, true, because we normally say that capital flows where the yields are high. So what it means is that if investors are looking at the Nigerian investment environment and they look at our yields and they see very high, attractive yields, of course, funds will flow into the market. While the funds are in here, they can also look at some other pockets of investment opportunities, which could be taking position in equities.
Okay.
You know, our position for where the direction will most likely swing is that there may be the need to hike MPR at this time.
Okay.
And of course, that will even make the market more attractive for investors to come in.
Thank you, Robert. Robert Motunde, Head of Research at AfriInvest. We do appreciate the time with us. So you have it. Some investors like Robert is expecting the MPC to hike interest rate, while some, like FVNquest, are saying that the MPC may hold interest rate at 12%. We keep our eyes on this and see how that pans out. And that'll be it here on Business Morning. Thank you so much for your time. I am Bolaji Akiwale. Bye for now.